Good morning, everybody. Paul here, coming at you with your crypto coffee update. You know what it is. It's the news, conferences, events, everything that you want to see as it pertains to the financial technology space that we are colloquially calling crypto. And of course, you know I got my coffee, so join me for that simultaneous sip in solidarity as we enjoy some caffeine. Great stuff, guys. All right, so you can see we have open in front of us today Cryptide.cc, your one-stop shop for all of the crypto news and events in the space. Video section has your crypto coffee videos from yours truly. News section covers not only all of the news we discuss in those videos, but even more so you can stay up to date at your leisure. And we have the blog section, which has a collection of crypto conferences happening all around the globe, and I aggregate these from all across the web, guys. So this is truly your one-stop shop. I even color-coded it for you. How easy is that? Cryptide.cc, check it out. Now, onto your feature presentation. The Google keyboard has enabled the Bitcoin symbol on iOS, which is pretty cool. Now, you got to be using the Google keyboard. You can't be using the Android keyboard. Not sure exactly as to why yet. They may be working on it, but the point of the matter is Google has enabled it. For some reason, Tim Copeland, the author, thought it was an infamous Bitcoin symbol. Maybe he associates it with money laundering and drug trafficking. However, that is a mantle reserved for the US dollar in terms of value amount. So, just poking some fun at Tim there. Also, Tim, you're in incognito mode. What you doing, bud? I'm just having fun here. So Bitcoin symbol, left-hand side, you can see it there. All you got to do is hold down the US dollar symbol, and there it is, sitting proudly on its throne next to a collection of other major world currencies. So this is just a symbolic notion that we are seeing a shift in the zeitgeist into Bitcoin and other digital currencies, for that matter, being utilized as mediums of exchange, cash, etc. Essentially a digital form of commerce that is being recognized as very, very legitimate. And that is also evident by the fact that Ethereum has reached its highest daily volume in over a year, which is exciting for some and a bit annoying for others. I'm one of the ones who finds it a bit annoying for a number of reasons. See, I have to upload to the Ethereum network semi-regularly as I support the Vuli network. They are built on top of Ethereum. So I ended up paying 4 times the amount that I would normally pay for gas costs to upload a video, and it took longer than it normally did during this chunk of time here. You can see where the chart's a little low, hovering around the 2B to 1B area. Now it's all the way up to 5 billion, assuming the B equals billion. So suffice to say, not necessarily the easiest thing, and it begs the question, when are we going to get this Constantinople hard fork, the sharding, the scalability, everything we're looking for to help the Ethereum network along and help these dApps run more fluidly? We are waiting with bated breath. Now, this is fantastic for investors since, of course, this entails a upward pressure on valuation, so some folk are very happy to have a bit lighter feeling in their bags. They're really happy about that. However, for the underlying utility of the network, it bodes well over the long term, but definitely is a bit perturbing in the short term, especially considering how many people can you really expect to pay 10 cent, 50 cent, a dollar, $1.50. Hey, back in the bull run of 2017, I remember spending $5 to upload something to the Ethereum network. It's just not a reasonable and sustainable state of affairs. So it's really just up in the air as to what is ultimately going to happen to solve this issue. But we're not going to rain on the parade. Congratulations to Ethereum. Great stuff. We're starting to see some movement in the crypto markets to shake some snow off of this winter. Next up, we have Afri. This is an individual who has worked very hard in the crypto space. He worked very hard on the Goerli testnet, which is a new testnet that is basically it extends across multiple instances of Ethereum in order to get a better understanding as to how these updates may ultimately affect the network. And Afri was excuse me, these allergies. Afri was, I guess you could say the victim. Maybe he's not a victim. Maybe he's just an individual with a difference of opinion with some of the other Ethereum community members. And ultimately, he has quit Ethereum. And this is a big, heavy-hitting player in terms of development for Ethereum, coming at a time, again, when we're waiting for the Constantinople hard fork. So not all is well in paradise, folks. This guy's taking a break from Gitter, Skype, Discord, Slack, Wire, Twitter, Reddit, essentially everything that is associated with Ethereum, taking a step back, saying, I don't want anything to do with this any longer, at least for the time being. And it's been difficult. Now, here in the space, in the crypto space, a lot of the time, journalists are like baby birds and mama birds, right? With Twitter being the mama bird, essentially all journalists do is regurgitate the information that they're given. I know, great analogy, but it's ultimately what the space feels like. Some individual journalists even just take entire Twitter threads and just write, this person said this. They also alluded to this. It's just right there in the Twitter thread. Just go to the primary source, right? Well, the fact that this has been relatively obfuscated from, and it's difficult to ascertain exactly what happened and who did what, I have not yet seen any articles relating to the subject matter. So here is the exclusive from Cryptide coming at you live with the primary source, as is our style, citing the primary source to get you the best information possible, folks. So again, Afri is no longer working on the Goerli testnet or is communicating on any of these channels. And as I said, it's relatively opaque. He did come around recently, though, and clarify, this is only 6 hours ago. He didn't quit social media. I quit Ethereum. So straight up quitting Ethereum. He didn't go dark. He just left the community. He's no longer coordinating hard forks, test nets, not contributing otherwise. And essentially he's looking, if you can see here, for other projects, preferably ones that do not have tokens, does not come with a token, since he has a lot of free time now. So again, we're not really sure exactly what happened, but suffice to say, it is something that is a bit maybe worrisome, maybe healthy ultimately, but considering that there hasn't been a lot of transparency as of yet, we'll keep you up to date as to what happens as we find out. Now, we're moving on to the governmental side of things, the Bitcoin ETF, the SEC's Hester Pierce and the CFTC's Quintez. They offered some insights into exactly what's happening, and this is kind of just a encapsulation of what we talked about previously in the last, I think, 2 Crypto Coffee updates ago, when we talked about ETFs, how they are surmised and eventually passed, and ultimately what the barriers are for the crypto space and the Bitcoin ETF. Now, Pierce said that at the SEC, they've been unwilling to sign off on a Bitcoin ETF, an exchange-traded product based on Bitcoin. My concern about our approach in that area is it looks a little bit like a merit-based approach, judging the underlying Bitcoin markets, continuing, quote, there are lots of markets that aren't regulated, but we nevertheless build products on top of them, end quote. So this is exactly what we talked about in the previous Crypto Coffee update, and there are methods by which individual ETFs can circumvent these issues. One of the ones being having a collection of exchanges, an indeterminate amount, for our example, let's say 5 exchanges, and essentially pull data from these exchanges across multiple 5-minute increments over the course of an hour. So you have a total of 12 data points per exchange, 5 exchanges total, meaning 60 total data points. So with that, you then use those 60 data points to average out the price, and voila, you have your underlying price for the digital asset, in this case, Bitcoin. So why is this a workaround? Simply because if you wanted to manipulate the price, for instance, let's say on a specific exchange, you would need to have the majority volume for a whole hour on 5 different major exchanges. Extremely difficult to do, and that kind of consistency in data would be very evident on the behalf of the CFTC and SEC. They would know immediately something's fishy, something's going on, and they would take action. Excuse me there, I'm turning into an old man. All right, so that's essentially one workaround. However, there's many other things that are in the mix, but as you know, government moves at the speed of molasses. It takes a while for things to get moving, and this is just Hester Pierce's and Brian Quintez's take on the issue. So suffice to say, nothing major coming out yet. We'll keep you in the loop as to what happens with these ETF filings. Now, South Korean capital, Seoul, $1 billion startup fund will include blockchain firms. This is Seoul's attempt to try and just propel them into the 21st century using digital technology to make Seoul one of the most attractive regions in the world for fintech. They're taking a leaf out of Singapore's book, who recently helped to ease some of the security token offerings regulations. But suffice to say, this is something that's going to come out in 2022 over the course of the next 2 to 3 years, and it's going to be very, very interesting to see what proportion of blockchain technology companies, what proportion of fintech technology companies in the context of Seoul's new exchange regulations ultimately receive capital in order to propel the space forward. There is something called the kimchi principle, which back in 2017 was very highlighted. Essentially, South Korea being a very homogenous nation, both ethnically and socially. They share a lot of information, very family-oriented culture. That you could see differentiations in price relative to the rest of the world when compared to South Korea. So for instance, Ripple was trading at a premium of, I believe it was 30 to 50 cents in South Korea at one time, which, given that Ripple never hit a valuation above $4, that was a wildly large premium. And again, it's been termed the kimchi premium. So to see South Korea investing in financial technology so intensely is not only exciting, but definitely begs the question as to how this kind of investment will ultimately shape the future for the small well, I guess you can't call it small, for the comparatively small geographically peninsula nation with a disproportionately powerful social and technological presence. I mean, I think we all here have heard of Samsung. All right, so we have more governments talking about more things. Nasdaq's Bitcoin and Ethereum indices solve a major problem for crypto. We already covered this as well, but I also wanted to encapsulate this a bit more succinctly to drive the point home that this is huge, guys. We talk a lot about volume manipulation, wash trading, etc., and that's something that ultimately, when you have a lot of capital, you want to invest in a liquid market, simply because if you buy into something that looks liquid and it ends up being illiquid, you are stuck in a position that may ultimately lose you a good deal of money rather than gain you money. Simply because you were gamed by the perception of there being much more liquidity than there actually is. So what Nasdaq has done is they have partnered with Brave New Coin and for the Bitcoin Liquid and Ethereum Liquid Index. These are indexes that essentially allow individual and institutional investors alike to ascertain exactly how liquid a specific market is and at what points you may or may not want to sell larger order volumes. And again, this is to reduce market manipulation, something that we just mentioned and just covered. Again, we're talking about ETFs here, so you can see all of these things are tied together as Wall Street and Washington together work to surmise how to best convey information about the crypto markets and ultimately protect investors. That's what it comes down to. In 2017, we saw a lot of scams. We saw a lot of people get burned by these scams. So seeing that these institutions want to protect larger investors to ensure that this money can flow into the space as safely as possible and ultimately benefit everybody is exciting to see. I went ahead and pulled up Brave New Coin. I'll link this below in the description. It was in the last informational video as well, just to give you an idea as to what a liquid index is in more detail. We're not going to hammer it home too crazily here. I think I pretty well encapsulated it. Just gives you an idea as to how liquid or illiquid a market is. So cool stuff. And speaking of Wall Street, they are talking about JP Morgan's cryptocurrency, and some analysts have thrown cold water, so to say, on the coin. It's very interesting. It's akin to getting limited to only being able to buy gambling cash in your gambling chips at one specific casino, and that's from JPM veteran and founder of blockchain firm Cadena, Will Martino. He's saying that essentially this is a centralized ledger. It's not particularly useful for trading outside of this centralized ledger. And ultimately, it's not necessarily something that's particularly interesting. And I could agree with that, except for the fact that JP Morgan trades $6 trillion daily between its various subsidiaries and partners. So consider that, $6 trillion, which is about 7.4 times the market cap of the entire crypto space at the very height of the last 2017-2018 bull run. So just because this isn't a fully decentralized permissionless ledger doesn't mean we should snub our noses at it and say, oh, well, this is absolutely useless. Why would you use this kind of technology? It makes no sense. It's very puritanical, and I think it's detracting from the real use cases of digital technology as a whole. The fact that you could expect JP Morgan to utilize an underlying network like Bitcoin when really they don't have de facto control over it is kind of ridiculous, considering that, again, they trade $6 trillion in assets. If something were to go awry, what are you going to do? Literally, Carlos, well, what am I going to do? Nothing, essentially. So having that de facto authoritarian control over how these funds are moved, because they are JP Morgan's personal assets, is something I don't take issue with per se. I think it's something that ultimately can help with liquidity settlements, considering that it is a one-to-one backed stable coin, maybe not backed formally by US dollars, but definitely is representative of a $1 note, meaning that you can much more quickly move liquidity around in this interbank network, and it can ultimately help to settle payments without having to pay transaction fees in the formal US dollar amount, which could save its clients money. This is just fiduciary responsibility that we would expect to see from any company. And ultimately, while James Diven has been a bit of a wishy-washy individual when it comes to Bitcoin itself, he seems to respect the underlying distributed ledger or even permission ledger technology as it applies to digital finance and the revolution of 21st century digitization for capital markets. And frankly, I think this contention with the fact that, hey, JP Morgan came out, said they're making a permission ledger, and what did they do? They created a permission ledger, lo and behold. I think this focus and contention with this bankster coin, which it very much is misplaced, since they're not trying to masquerade as anything they're not. They're being very forthright about this. If you really want to take contention with something, why not take contention with a project that has claimed multiple times that it's a decentralized unpermissioned ledger. It's going to be great. It's revolutionary. It's distributed, and it's fantastic. Well, why not take contention with something that says all these things and ultimately is the opposite? Why not Tron, for instance, which has super representatives and the entire voting system was a sham? Or, for instance, they copied and stole their entire white paper, basically just lifting it from other sources and taking out any of the reference material. And how about the fact that they basically lifted the entire Ethereum J library, which wouldn't have been a problem if they didn't take out what is it, LPJC, I think it is, essentially the public license for Ethereum that says, hey, you can use this, you just got to keep this public license in here to let you know where it came from. I can't remember the acronym, but they essentially took that out intentionally. So yeah, they stole something that was intended to be open source. And again, this is a unpermissioned distributed ledger network that ultimately runs with, I believe it's 27 super representatives. And here's one super representative candidate accused of misleading voters. Big surprise there. We saw that with EOS. Now we're seeing it with Tron. So it just goes to show that you have all of these projects that claim to be distributed ledgers, that claim to be representative of the community's interests, but they're frankly not at all. They are scammy projects ran by people who are making false claims to the wider community. And frankly, when I take that kind of shadiness and juxtapose it next to the relative forthrightness we've seen in JP Morgan's cryptocurrency, ultimately, I would rather have an entity that is being forthright about their intent in the space than an entity that is obfuscating from really their fiduciary responsibility and misleading investors. But this is just one man's opinion. Let me know what you think about this below in the comments. Am I wrong in this, perhaps? Maybe JP Morgan coin has a bit more unscrupulous aims than I may be giving it credit for. And maybe Tron, who knows? Maybe it really is the Chinese dream, and it ends up being a fantastic, very heavily permissioned cryptocurrency. So let me know below in the comments. All the links below in the description. And of course, a link to the Discord. Check out the Discord, guys. We always have great conversation going on in there. And you can find Origami Oracle hanging out in there, posting some very interesting charts and analysis of the cryptocurrency prices, specifically Bitcoin. So if that's up your alley, if you're trying to find out what is happening with this price action, you could check it out in there exclusively, or check them out on Twitter. So thanks so much for watching, guys. My name is Paul. We are Cryptide. And remember, the tide is rising, as is JP Morgan's ability to transfer trillions of dollars in digital assets. Pretty cool.